if you can put the trade war issues aside, we're a ways away from recession. We have a fiscal stimulus. Interest rates are still historically low, and the earnings are starting to come in well again. So there's certainly pockets of opportunity. Obviously, you have some rotation issues. Growth is pretty darn expensive, but some good stories still in, say, small cap value, and of course internationally. I mean, look at the UK. You have a preponderance of energy in the FTSE, and there's opportunities to be had. But we still have the geopolitical issues that keep showing up.
So, okay, but let me ask you one other question, because we were looking at some stocks that have took off yesterday. Where are you on technology in terms of pricing?
You are about 3/4 of the way to bubble pricing.
So does that mean that you're not buying technology?
I think it's a little expensive.
Where do you stand there?
Well, I love the fact that we talked about small cap value, because that's where we like to play. So there's a lot of small cap value technology, which is still probably pretty cheap. You have had multiple compression as the central banks have been taking some monetary policy or easing out. So you now need to grow into those new multiples, which I think we were paid for last year in a lot of these big cap companies. But we still see the value in these small caps. We expect to see M&A come back as money is repatriated, and they try to buy growth. So we've been actually deploying capital in the last few weeks.
You guys, as for either of you guys, there's been this big outperformance of growth to value, right? Everybody knows that. Is there precedent for that gap to close just because growth falls sharply to meet value?
Well, sure. I mean,
and when does that happen last?
We're at 3 times the price to book of growth relative to value in the S&P 500, and we got to 4 before the bubble burst in 2000. So, that's where I say, sure, the president is obviously there. The average is about 2 times, so we're getting kind of frothy.
And then does the growth clause pull back in business sentiment and capex and things of that sort? If you
and remember that the trick with value, of course, is by a sort of casual definition of value, for lack of a better term. You got a lot of financials. So if you're looking at kind of a basic value index, we have a little bit of headwind with the flattening of the yield curve. But look, there should still be some normalization on the long end of the curve that should ultimately help financials, and then that also bolsters the value story.
Chris, I know you've been talking about the small caps and how well you think they're going to perform versus the other major averages. That's certainly been right for a while. What bothers you when you look out on the horizon? What could be something that could mess that up?
Well, it continues to be the headlines out of D.C. and what sort of rhetoric we're hearing, and whether this trade war continues to, increase, and how does that then filter down into confidence? That would be a concern that we're watching here in earnings season in July.
What about just higher input prices, which we're hearing from a lot of the big companies that are out there? I would guess that smaller companies have a little less wiggle room when it comes to dealing with higher input costs.
You're absolutely correct. Look, there's some unintended consequences. Certainly the steel tariffs are causing, higher input prices. Let's say, there's an article earlier this week about a nail company that's going to maybe go into bankruptcy because they are paying higher steel prices. So, look, that's a part of the trade negotiation. I think ultimately, this gets resolved. It's just a matter of how long does this take, how much damage will be done to our economy. We're going to have Mexican elections next week, so hopefully we can begin to move forward with NAFTA. I don't think it's going to be all that great because you're really bringing in an anti-American president that we think is going to win there. But I do think that at some point there's going to be negotiation, and the economy does look still strong. The high yield market doesn't show any sort of weakness yet, which would be kind of a concern on growth. So we're still very bullish that the growth is out there.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.